Well, Tesla stock, it's the hot stock out there at the moment. Everyone's talking about it. Everyone's talking about Tesla. How low is it going to go? And today I thought I would speak about that and my thoughts on Tesla stock at the moment. So yeah, I mean, $137. I think everyone, comment down below, where is your buying price? I think everyone agrees Tesla is a good company. The big debate, I think, with Tesla is the valuation you pay up for it. And yeah, I mean, at $137 now, 42 times earnings, a 400 billion market cap company now. At what point is your buy point for Tesla? I spoke about it a few weeks ago, and it was $183 at the time, and I said, look, in my opinion, I'm a big fan of Tesla. I think Tesla has a great future. You've got the Cybertruck coming, you've got the semi-truck coming up as well, and we're only in the early stages of EV, the transformation into the EVs, and the next 5 years are still going to be massive for a lot of these EV stocks, especially Tesla. They're going to do really well in the next 5 years. And I'm a fan of it. I've owned it twice before. I owned it in 2018 through to 2020. Made hundreds of percent return on it. I owned it in 2021 as well, and I made about 100% on it then. So I've owned this stock twice, and I think, obviously I'm a big fan of it, and I think it'll do very well in the future. And for me, it's a stock that I want to own a third time. I think it's a stock that the only problem it went to insane valuations. I think when you were talking nearly $400 for me, I always looked at that point and going, that's too much for Tesla. Like, people were saying that still, like, oh, Tesla's going to be a $1,000 stock, and there was still YouTubers that was at 52k still saying, oh, it's going to go higher, it's still got 3x room from here. And I looked at it that point of view when I originally sold my second investment in Tesla, and I was like, this is just way too high. Like, what's priced in now to Tesla stock? They need to absolutely smash it every year with 50% revenue growth, profit growing at 50% a year. And and it's got to maintain a very high valuation. It's so tricky for it to do that. And then I sold my shares off at that point. And I thought, if it ever comes back to an attractive valuation, I'll consider it. And it's just been going lower and lower. And as soon as it broke that $200 range, I was like, okay, maybe it's worth a little bit of a nibble now. And what I said in this video is that I'm just going to nibble away and just give it a long time horizon, because when you've been at such an extended valuation and then you have all the negativity building up in the background, it would be quite easy to see Tesla stock fall from this $200 price target down to 180, 150, and could it even push to that $100 range? Well, it's gone below 150 and it is pushing towards that $100 range. And the exact same thing for me here is that it's down to 41% in the last 6 months. In the last 5 days, it's down 13%. In the last month, it's down 17, nearly 18%. When this stock is having this downtrend that it's on right now, I don't want to try guess the bottom here. I'm just trying to give myself a long runway, and the longer it goes, I will look to consider to pick up some more Tesla shares. And I think, for me personally, I think $140 is now, or $137 is actually a pretty good range for Tesla. I think anything below 150 is great. If it gets towards that 100 range, I think that's absolutely amazing. I can't, personally for me, I don't see it going below 100, because if it does go below 100, I mean, that would be trading like the 20 times earnings, high 20s times earnings, and I think that would be unbelievable. I mean, it could happen, in this market, in this bear market, it could happen, but I think that would be, I don't think there would be enough people that would sit on the sidelines and go and give up, like, oh, Tesla's at 28, 27 times earnings, it's not investable, let's leave it. I think too many people would jump in it at that point, but hey, we never know in this sort of market. And I guess really that the whole negativity is still being caused around, it's not any fundamental deterioration of Tesla. Like, if you look at the financials, if you look at last quarter, it was fantastic. The EPS was beat, and in such a poor time frame on fears of recession and everything like that, it's still putting 55% year-over-year growth. Now, personally for me, analysts are forecasting it to stay towards that 50% range on profit and revenue growth. I personally don't think they'll be able to achieve that at the moment. I think when you look at my numbers, I've got them more towards a 30% growth. But yeah, even at 30% growth, I think this is still a massive bargain. So, financially, they're still performing absolutely amazing. And I think the share price is priced in more than a slowdown in the financials. There's not really any financial deterioration of why this company's lost, 50% since September. Financially, they perform amazing. a lot of it is the fear that's around Tesla at the moment and Elon Musk. Obviously, Elon Musk, Tesla, two things that sell headlines in newspapers and the media, and gets people viewing the media and everything like that. But at the moment, obviously, there's a lot of what's going on around the Twitter situation. There's a lot of nervousness around Tesla shareholders, like, oh, why is Elon Musk getting involved in this? Or, is the concentration from Tesla going to go away because he's focusing on Twitter so much? And some of the actions that Elon Musk has taken at the moment has made investors nervous, and uncertainty has been created, and what investors don't like is uncertainty, and Elon Musk is definitely doing that at the moment. And especially when it's hard to see Tesla at the moment because it's been on such a good run, but Tesla's always had so much negativity put on it. For some reason, whatever it may be, Tesla has never been a light stock, and Elon Musk hasn't been either, I would say, a very liked person as well. There's always been negativity around him, and it's been there in the background in the last few years, but it's been a bit quiet because the share price has been going up. But if any of you guys were involved in Tesla in like 2018, 2019, even before that, you would know how much negativity was on that stock. And now that the people that have been bearish and negative on Tesla have something to grab hold of, I think that's going to just drive it more and more the more this Twitter situation carries on and the Elon Musk situation carries on. So that's why I've always, kind of said, like, for me personally, I'm bracing for this to go lower. As long as that drama's caused around Tesla, I generally think I can't see this moving in a positive direction, as well as with some, recession fears building in the background. I don't think it's an attractive place right now for Tesla, and I could see this downtrend certainly carrying on, which I would not mind. I mean, if we see this stock keep going lower and lower, I'll be happy with that because I'll be able to pick some more shares up. But overall, my feeling is that I am being quite cautious, and as I said in the last video, it's a stock that I am giving a big runway for, because I think you could generally see this go lower and lower, and if it does, I want to have room to kind of average in here. But just having a look at some numbers very quickly. So I updated this from a month ago, and I was actually really shocked to see that the market cap has lost over 100 billion since we last covered the stock. When I was updating the market cap, 100 billion in like a month, that's absolutely insane. So just having a bit of a numbers wise look at Tesla, for me, I put a lower end of 15% revenue growth, a midpoint of 20% revenue growth, which I think is around about achievable. Like I said, I think they'll come somewhere in the next few years, growing at around 30% revenue growth. So that's a little bit under my expectations, and a high end of 30% growth, which I think they can achieve. As I was just saying, like, this is way below what analysts are forecasting at. Analysts are forecasting nearly 50% growth this coming up, 50% the growth the year after. So over the next 5 years, that would be somewhere around a range of, I would say, towards the low 40 range, because I would expect it to slow down slightly a little bit after that point. So this is way conservative numbers, in my opinion, which I think prices in the potential slowdown of a recession as well. Profit margins of 10, 15, 20%. At the moment, they do around 15% profit margins. I think that's pretty fair. I think that obviously the more the scale, they could potentially end up to the 20% range. I think 10% is also a bit of a fair number, because if you imagine the semi-truck production comes in and the Cybertruck production comes in, I'm sure that could potentially affect gross margins slightly. So yeah, I think I'd stick at 15%. I think that's pretty fair. I put a total earnings multiple of 25 in. I think that Tesla is going to be a premium company. If you've got decent profit margins, if you're growing at 20, even 15% a year, I think you're going to hold up a decent valuation. I think you're going to have a bit of a premium. I think Tesla's always going to trade at a premium until the growth slows down to probably something like a single digit. So I think that's pretty fair. At the moment, we've got 16% upside in the next 5 years, 50% upside in the next 5 years, and on the high side, 174% upside in the next 5 years. So I think at the moment, as I've said previously, for me, I've always said that from here, I think Tesla will double in the next 5 years. I think you've got to double up in Tesla at the moment in the share price, and that's why I'm quite happy to buy it at the moment. And the lower it goes, I think that upside gets created even bigger. And obviously, like for me, when I look at Tesla, my numbers for Tesla are quite conservative. I think the semi-truck and the Cybertruck are going to be massive growth drivers for the next 2-3 years, and then by then we'll probably actually have another model in like 3 years time. So I mean, realistically, like, this is quite conservative for me. Like I said, you know, if you look at the middle point, I put 20% here. I generally think like Tesla will grow more towards the 30% range. I think the profit margin's about fair when you factor in new models and the ramp up coming in. The multiple side of it, you know, 25 times earnings, I don't think Tesla would. I mean, that's a premium than the market, but I think Tesla would probably command more of a premium. I don't think he would grow. I think if you're growing 20-30% a year, you're probably going to be trading more of a multiple into the 30s and 40s. I mean, even now, Tesla trades, even with all this pressure that's going on, it's still trading at a premium of 42 times earnings because of the profit growth and the revenue growth and the balance sheet and the future it has. It's still trading at a premium now when you consider it's been, you know, really beaten down. And I think I like, you know, if we just very quickly go on here and let's say we go to, let's say, 42 times earnings, which it's trading at right now, then that instantly puts the middle side up to 140%. So I think the big thing with Tesla is that they obviously stay, you know, towards 20-30% revenue growth, which I think it will do. Obviously hold on to that 15% profit margins. And I think the big thing that will dictate Tesla's future returns is the valuation it trades at. I think if it does hold more of an average stock market valuation, you know, that 20 times earnings, obviously I think the upside is okay, but I think you're probably going to get a better return from Tesla if it holds on to a bit of a premium valuation, as it has done, you know, towards that 30-40 times earnings. I think that's where you would make more upside from this stock. So yeah, I think for me, when you look at the risk to reward now, I think when you look at Tesla at $137, I think you are weighed more on the reward side now. I don't think, when you look at $400, I thought the risk was very high. Like, for Tesla to, you know, command that valuation, they have to execute absolutely phenomenal. There's got to be no mistakes. I think at $137, you can add in some mistakes. I think you can add in a recession. I think you can add in that you know, the revenue growth slows down, the profit growth, you know, slows down. I think you can add in that the valuation and the metrics contract a little bit. I think when you look at Tesla now at $137, I think the reward is now outweighing the risk, in my opinion, and I think that's why it's a good opportunity. But at the same time, like I was saying a little bit earlier, for me, when you are on this downtrend, when you have this negative pressure, when you do have a potential recession looming on Tesla, I also think it's worth being cautious. Like I said last month, that this downtrend could continue, and for me, I don't want to be going all in head first in this. But at the same time, like I said a minute ago, I do think it's to the attractive point now where I think this is a good buying range. I think the reward is higher than the risk, and I think it's a good opportunity to be looking at, in my opinion. So that's my thoughts on Tesla, where it is right now. Anyway, a little bit of an updated thoughts on after the stock has lost, you know, nearly 100 billion since I last covered the stock. So let me know what you think. You know, I think that you can't argue it's a good company. I think the big thing is, what price do you pay for it? And I'd be interested to hear what you guys think it is right now. Is $137 a buy? Does it have to go to 100 for you? Does it have to go to 80 for you? I'd be interested to hear what you guys think as well. So thanks for watching anyway, guys. Smash that like button, and I'll see you all in a bit.